Today, the project we're going to look at is a decentralized perpetual exchange on the Arbitrum chain, which has a dual token economy and is owned by a DAO. It's called OPENFI. In this video, we're going to talk about what makes this exchange different and better than other competitors out there, and what benefit can we get from this, how does it operate, how can we earn from this, and in the end, we're also going to talk about their initial node offering, also known as INO. So if you want to find all that out, make sure that you watch till the end. But as always, do know that anything that I'm going to say is not going to be an investment or a financial advice. So always do your own investigation and research, and always invest what you can afford to lose. Now, let's get right into the video. Now, I'm personally very excited when it comes to platforms like these, especially those that have a dual token economy, because I always find this very interesting, and I'm always curious, how do they shape their token model, or what purpose does each token has? What was the point of making two tokens, and what they want to achieve through it? But before learning about their tokens, what we need to understand right now is what OPENFI actually is. So here's the proper introduction of OPENFI. This is a cutting-edge decentralized exchange that allows users to conduct spot and perpetual trades with low swap fees and zero price impact trades. Now, for those of you guys who don't know what spot and perpetual trade is, spot trading means that the cryptocurrencies are bought for immediate delivery. The price is determined by the current market value of the asset, and the transaction is executed at the moment. On the other hand, perpetual trading is a type of trading in which the traders speculate the future price movement of an asset without an expiration date. They take long and short position on the price of particular cryptocurrencies, and without the need of physical delivery of the asset. So this is what spot and perpetual trading is, and we have this in this platform. That also means we can do leverage trading in it. I think it's about like 30x, but we're gonna dive into details afterwards. So OPENFI, it will operate on a very vast scale, and it will provide traders an unparalleled access to diverse multi-asset pool that are available for trading around the clock. The exchange is designed to provide traders with the best possible trading experience with advanced features such as market making, swap fees, and leverage trading. Additionally, the platform is bolstered by a diverse multi-asset pool, which enables liquidity providers to earn fees while providing a stable and reliable trading environment for users. So in this one, we have the option to stake. Not just in one token, but we have option to stake both of their token, and they both come with their own benefits. But first, we're going to talk about how does the exchange operate. Now, it says here on the website, treasury assets support for spot trading with no slippage with contract leverage of up to 30x. Now, when it comes to spot trading, using treasury assets as a support means that the exchange has a reserve of these assets to ensure that there is sufficient liquidity to meet the demand from traders. This helps to prevent slippage, which is a situation when an order cannot be executed at a desired price due to lack of market liquidity. Now, in addition to treasury asset support, the exchange offers a contract leverage of up to 30x, which means that traders can take a larger position than the amount of capital they have deposited. This is achieved through the use of margin trading, in which the exchange provides additional fund to the trader to increase their buying power. However, it is important to note that this comes with its own risk. If you are trading with the 30x leverage, that means that you can increase your profit if you get profit by 30 times, but if you go for a loss, you have to fulfill that loss. So when it comes to leverage trading, there's always higher risk. Actually, it is a pretty simple formula. The higher the risk, the higher the rewards. So when you have high leverage, that increases your risks as well. And now up next, it says dynamic pricing is supported by Chainlink oracles and an aggregate of prices from leading volume exchanges. Now, Chainlink oracles is a decentralized network that connects smart contracts with external data sources, including real-time market data. So by using Chainlink oracles, exchanges can obtain accurate price data from a variety of sources, including leading volume exchanges. Now, other than Chainlink oracles, they use an aggregate of prices from multiple leading volume exchanges to determine the current market price of an asset. This helps to ensure that the price is reflective of the overall market sentiment rather than being skewed by activity of a particular exchange. Now, up next, it says 10% seigniorage of open tokens is allocated to the DAO community, 70% of the transaction fees is allocated to repurchase open, and 30% to vNectar. Now, this is where it becomes interesting because we just learned the names of both their tokens, Open and Nectar. Now, in the context of open tokens, seigniorage refers to the amount of value that is created by the protocol that is not backed by any physical asset or collateral. In this case, 10% of the seigniorage generated by the open token is allocated to the DAO, in which the participants of the DAO participates in the decision-making process of the organization. Additionally, 70% of the transaction fee that is generated by the open platform is allocated to repurchasing open tokens from the market. This helps to create continuous demand for the open tokens, which can help support the price of the token. The remaining 30% of the transaction fees is allocated to the vNectar, which is the governance token that enables holders to participate in the decision-making process in the DAO, which include voting for proposals and staking tokens to earn rewards. Now, overall, these allocation mechanisms helps to create a self-sustaining ecosystem around the open token, where participants are incentivized to hold the token and contribute to the growth and development of the platform. Now, if you want to understand this whole thing better, you can take a look at this flow chart that explains the allocation mechanism of fees that is generated by this exchange. Now, let's learn about the Open and the Nectar token. Starting with open tokens, both are ERC20 token on the Arbitrum chain. Open is an asset endorsement token as well as a certificate of ownership treasury asset. Basically, it means that it is backed by a reserve of treasury assets, which makes it risk-free and completely safe, like government bonds or fiat currencies. The reserve is used to ensure that there is sufficient liquidity to meet the demand from traders to support the price of the token. Now, what really fascinates me here is how they're ensuring investors confidence. Open token has a price floor below which it can never trade. If the price of the token starts to go down from that floor price, the treasury, it is used to buy back the open token and then they destroy them. Now, what this does is that it increases the demand of the token, and when they get destroyed, the supply is reduced, which appreciates the value of the open token. So by using this mechanism, the open token's price is maintained above the floor price, which helps to provide stability and confidence to investors. Now we get the option to buy and stake the open token here. It shows staking APR to be 299%, 561%, 2658%, which is really solid. And since it is risk-free, we can earn a guaranteed income from here. And in these type of staking, we do know the mechanism. The longer we stake it for, the more rewards that we get. Now, let's learn about the Nectar token. Nectar tokens are used to manage contracts and represent a value contribution to the protocol. Again, you get the option to stake Nectar tokens, and when you stake Nectar tokens, you get vNectar, which gives you voting and the administration rights over the DAO. The longer you lock up your Nectar tokens, the greater the reward and the voting rights that you receive. This incentivizes long-term holding and participation in the governance process. Now, trading fees on OPENFI are set at 0.3% for volatile assets and 0.01% for stable assets. The fees generated from trading are distributed to voters over a period of 7 days at the start of the next epoch, with proportional distribution to vNectar users who voted for their preferred gauge. If a protocol offers to bribe a pool, the vNectar holders who voted for that pool will receive a proportional share of the entire bribe. Now, 30% of the fees that are generated from trading are returned to the vNectar holders on a daily basis, while the remaining 70% goes to the treasury. The fees collected by the treasury are used to repurchase open tokens and build a deep liquidity pool on the OpenUSDT trading pair over time. Dual token economy in a decentralized crypto exchange that offers spot and perpetual trading is something that we don't usually see elsewhere. And a token that is backed by a reserve so that its market price stays above the floor price, and a token that lets you earn and simultaneously gives you voting rights in the DAO. Again, it is something that we don't usually see, and I don't think it gets any better than this. And not to mention all the tools and the services that we get to trade. We have leverage trading. We have option to open long and short positions and use functions like stop loss and limit orders to trade without any worries. Like even if you're sleeping, we do know that we're not going to lose our assets if these functions are in place. Now, we do have an announcement here. They mentioned in the introduction, it was about the initial node offering. And I know you all have been waiting for this. So OPENFI is having an initial node offering, or INO, on the OPENFI platform, which requires an investment of 1000 USDT, which will grant eligibility for a node and an investment amount of open tokens. Now, it is important to note that each wallet is limited to only one node, meaning that each participant can only invest once. Now, the INO is scheduled to take place on March 24th at 12 UTC, which will be hosted on the OPENFI platform, which can be accessed here. So I think this is a wonderful opportunity that we have ahead of us, and we may not have a lot of time left to it. So probably when the video is live, the INO will be live, so make sure that you do not miss this opportunity. I'm gonna give you guys all the links in the description so you can do your own research. You can follow them on all their social media, which I'll be linking in the description. Make sure they do that so that you can be updated whenever anything else comes up. But yeah, I think this is an amazing opportunity, and yeah, I'll see you guys in the next one shortly, so stay tuned.